Welcome, everybody. This is Lori Fredrickson from Bivio, and I'm here with Becky Cruz, Joanne Hermiston, and Iris Smilovitz in the back room. And tonight we're going to talk about taxes.
If you have income, the IRS wants their share. We need to follow their rules on how to track and report it and pay taxes on it. Your investment club is a partnership, and the tax form you file is called a 1065 form. It is what is called an informational return. Your club does not have to pay taxes directly. All of the income and expenses are divided up between the members, and they report and pay taxes on their share on their personal tax returns. They know how much to report because you give them a form called a K-1, which is also part of your taxes. It shows each person's portion of your club income and expenses. Starting this year, they will also get a K-3 form showing information they need if they report foreign income on their personal taxes. You also send in all the K-1s and K-3s with your club tax filings. Each member's copy tells what amounts they need to report on their personal tax forms. That is where the taxes get paid on your club income. So who has to file? Well, you do. If you have an EIN number, you need to file club taxes because the IRS computer will be looking for a filing from you. It does not matter how long your club has been in existence or how much income you have had. The timeline you will be working with involves these dates. This year, your club taxes need to be filed by March 15th, 2022. That means they are due a month before the April 15th deadline for your personal taxes. You will not be able to do your taxes until you've received the 1099 forms, which are sent by the financial institutions to you and to the IRS to report your income. Financial institutions are supposed to get them to you by February 15th, but some have requested extensions until the end of February. Most brokers have posted when you might expect them on their websites. This year, the IRS continues to make late changes to the partnership tax return instructions. It is possible that they will change something pertaining to your club return after you've already filed it that would require you to amend it. To make it easier for you to do that, we are recommending that all clubs apply for an automatic 6-month extension. This will move the due date of your return from March 15th to September 15th. You file for the extension by sending in IRS Form 7004. You can find a link to the form and the instructions on our help page. You will need to send in the form before March 15th. The reason we are recommending this is that the process to amend a return, if it becomes needed, is much simpler if it is done before the due date or extended due date of the return. This is especially true if your club is not opted out of the CPAR audit requirements. Now, this doesn't mean you need to wait to file your club taxes until after March 15th. It just gives you more flexibility in the case that you have to amend them. Your members cannot complete their own personal taxes until you have given them their K-1s and K-3s. You will need to file your complete club taxes before you can do that, and you probably still want to file them no later than March 15th, even if you file for an extension. Just be aware that if your club later has to file an amended return, your members may also need to file amended personal returns. If your club doesn't file by April 15th, members will also need to file for extensions for filing their personal taxes. If you file late or not at all, or you file forms with missing or incorrect information on them, there is a stiff penalty. It is $210 for each month or part of a month for a maximum of 12 months that the failure continues, multiplied by the total number of persons who are partners in the partnership during any part of the partnership's tax year for which the return is due. Plus, there's a minimum $280 penalty for each failure to furnish a K-1 or K-3 to a partner when due, and or for each K-1 or K-3 in which there is missing or incorrect information. This adds up quickly. Each year we get questions from clubs that have received tax bills for thousands or tens of thousands of dollars because they have failed to meet these requirements. The good news is that there are only a few easy steps needed to prepare your taxes. You'll follow them by going to Accounting, Taxes. As you can see here, there are steps you will follow to guide you through the tax preparation process. There are 6 steps in total. When you start, you'll see the first 2. To prepare correct taxes, you must do each one before you continue to the next one. You need to do a club audit as your first step. Verifying your records is critical. If your bivio records are not correct, your taxes will not be correct. You cannot just assume that the information in bivio is correct. Even if you use AccountSync, and even if you check your cash balances and number of shares of stock each month like we recommend, there are other parameters affecting your accounting and correct tax reporting that would not be covered in those quick checks. Unless you do the audit we recommend, you won't find them. There's a reason there are 6 steps shown to prepare your taxes. You do not want to skip any of them. Without an audit, you will not know 2 main things that affect your taxes. First, that the income your club has earned during the year is being reported correctly. And second, that your member accounts are being tracked correctly. If they are not, the club income won't be divided up amongst your members correctly. That will make their personal tax reporting wrong. We have prepared a form you should use to guide you through the steps of an audit. The link for Tax Step 1 takes you to a page with a link on it and a presentation about how to use it. I do want to highlight Step 2 of the audit because it contains 2 critical checks that will quickly tell you right off the bat whether you are even close to ready to prepare your taxes. This is to verify that your closing balances are correct in bivio. You do this using a bivio valuation report and your end of year statements for each of your financial accounts. First, check that the cash balance shown in bivio as of the end of the year agrees exactly with the balance shown on each of your account statements. Your club may just have a brokerage account, or it may also have a bank account. The cash balances for each account listed on the Accounting Accounts page should agree to the corresponding account statement as of the end of the year. You should not see balances for accounts listed that you don't actually have. Then you compare the number of shares of each stock you own, first on the bivio valuation statement, and then on your brokerage statement. The bivio account should show exactly the same number of shares that the brokerage account does. I can't emphasize this step enough. It is a critical point. If the cash balances in bivio do not agree with the cash balances shown on your financial institution statements, and you don't have a valid reason, such as an outstanding check for this, or the number of shares of stock shown in bivio does not agree with the number of shares shown by the broker, then go no further. You need to stop and find and fix the problem. Your taxes will be prepared using your bivio accounting information. There is no point in going any further if it is not correct. In fact, if you're a club member, you should make sure that your treasurer can demonstrate that these things agree. You are all responsible if your taxes are filed incorrectly. The bottom line is this: your taxes are prepared from the information you've entered in bivio. Unless you do an audit and verify that it's correct, your taxes may just be garbage in, garbage out. That is why you need to do step 1. An audit can be done at any time once your December 31 brokerage statements are ready. It will verify that all of your accounting records are correct through that time. And now Lori will continue with our presentation.
Thank you, Joanne. So even after you do an audit, there may be some last minute changes that are reported on the 1099 form that you're going to get from your broker that you'll need to adjust for. You won't know about them until you receive the 1099. Steps 2 and 3 of the tax prep process guide you through doing this. Before we get into the specifics of this step, let's just review what a 1099 is. A 1099 is a form that your financial institution sends to the IRS telling them how much taxable income that you have made during the year. They also send a copy to your club. There are many types of 1099s. Income from your investment activities will probably show up on one of three different types. A 1099 INT will report your interest income. A 1099 DIV will report your dividends. And a 1099B will report your stock sales and your capital gains and losses. In addition to these things, you may find supplemental information such as foreign company details that you will need to report your taxes correctly. So what do you do with your 1099? Well, the IRS is going to be matching up the information provided to them on the 1099s with what you report on your taxes. So you need to know that your bivio records agree with them, or you have a valid reason for any disagreements. Brokers do make mistakes on 1099s, but if something differs from your bivio records, you need to investigate why. You may have differences even though you've done an audit. Some tax information doesn't come through until you receive your 1099s. When it does, there are details that you might need to fine-tune to make sure that your income is reported correctly. These changes will not be done for you automatically by AccountSync. You need to do them during steps 2 and step 3 of the tax prep process. The changes you may need to work on may include things like this. You might find that money market dividends have been classified incorrectly. We tend to think of distributions from money market funds where we park our cash as interest, but in many cases they are actually dividends. You'll need to make sure that they've been classified in bivio the same way that your broker shows. Dividend dates. Sometimes dividends which your broker credits to your account in January are reported to you as previous year dividends. If a company doesn't have sufficient earnings to support a dividend, income that was originally reported to you as a dividend will get reclassified on your 1099 as a return of capital or non-dividend distribution. This requires a manual adjustment in bivio. You also might have an investment where you find that not all of the dividend you receive could be considered a qualified dividend. In this case, you'll have to adjust the dividend entries that were made during the year and split them up into the different types of income that the broker shows. You might find a wash sale that you triggered by buying a stock too close to a sale that you had, which resulted in a loss. And you may own foreign companies where you need to adjust the country code associated with them or the percentage of foreign income that they pay. As I said earlier, many of these things you won't know about until you get your 1099, but they all require adjustments to your bivio records to produce correct taxes. We're going to be showing you how to go through doing that a little bit later in this webinar. Before we get into doing that, just one other thing. We're going to talk about a subject that often raises a lot of questions. You may see notes on your reports that refer to qualified dividends. What are those? Well, they are a good thing. They qualify for a reduced tax rate. For most people, they are taxed at lower long-term capital gains rates rather than at ordinary income rates. There are 3 requirements for a dividend to be considered qualified. First, only U.S. and certain foreign companies can actually issue qualified dividends. Second, only certain types of dividends are qualified. Dividends from money market accounts are usually not. Neither are most of the dividends from REITs. There's a holding period requirement. You need to have owned the stock paying the dividend for more than 60 days during the 121 days that begin 60 days before the ex-dividend date. What's that? When a dividend is declared by a company, they also specify that it will be paid to owners of record as of a certain date. The stock exchanges determine who those are by establishing an ex-dividend date. Usually this is 1 business day before the record date. If you buy and own a stock before the ex-dividend date, you get the dividend. If you buy it on or after that date, you don't. Bivio checks this holding period based on the ex-dividend information entered when the dividend is recorded. It's important to understand that brokers are not required to run this check. All they have to do is tell you if a dividend is eligible to be qualified. You may find that this will mean the amount of qualified dividends reported by bivio is different from what your broker shows. If you see differences, make sure you know why, but if there is a good explanation, it is okay. In step 2, you'll be answering questions and making comparisons that will ensure that your dividend information is reported as your broker shows it on your 1099. As I was just discussing, information on the tax classifications of dividends often doesn't show up until you get the 1099. If the information is different than what was initially entered in bivio, you need to make adjustments to it when you do step 2. There are 4 different things that you need to do during this step. First of all, you need to check that the interest entries shown in bivio agree with what your broker shows on your 1099 INT. Second, you need to make sure you've identified the investments in bivio that don't pay 100% qualified dividends. Third, you need to make sure that the total amounts and the dividend classifications agree with your broker and make any adjustments needed if they don't. And fourth, for any dividends paid by foreign companies or ETFs or mutual funds that hold foreign companies, you'll need to make sure the proper country is identified and enter what percentage of the dividend is foreign income. Next, we're going to show you how you do each of these steps. When you select step 2, a page listing all your interest and dividends opens. At the top are all the interest transactions that you've entered in bivio. The total shown in this section should equal the total interest reported on your 1099 INT. If it doesn't, you may have money market dividends entered as interest or vice versa. You just use the edit link next to an entry if you need to adjust its classification. At the bottom of the page, you'll see a list of the dividends that you've entered in bivio. First, you want to make sure that in this column, labeled 100% qualified dividends, that you see a yes for all stocks that pay 100% qualified dividends, or a no for those that do not pay 100% qualified dividends. There should be a no for investments like REITs, ETFs, and many mutual funds. If you see any of the dividends on your 1099s have been reclassified into different distribution types, then you should see a no in this column. This is what you might see on your 1099 that tells you to select no. As you can see, for this ETF, the total dividends shown in this column have been split into an ordinary or non-qualified portion and another portion that's eligible for qualified status. So this ETF does not pay 100% qualified dividends. Here's another example of the type of reporting you might see where not all of the dividends were qualified. To change what is shown in bivio to indicate that not all the dividends are qualified, click on the yes or no that shows. It's a link that will open this page. You just select no if the company does not pay 100% qualified dividends. In the next part of step 2, you need to check that the total dividends shown for each company agrees with the broker. In bivio, you'll see your dividends listed by company. Most brokers provide a corresponding detail list on your 1099 that you can compare this against. We'll look at that in a minute. You'll be able to do a quick initial check by comparing the dividend totals for each company to what is shown in your 1099. If the totals don't agree, you can compare each detail to determine where the discrepancy lies. If you need to make any changes, you can find a direct link back to your records to edit the transaction. You'll be checking the bivio information against dividend detail information on your 1099 DIV. Many of them look like this, which you can see is very similar to the bivio review page. You may find that your 1099 DIV looks a little different from this, but it will have the same information on it, just in a little different format. In any case, this is what you do. You look at the dividend totals to compare to the bivio report. And if they don't agree, compare the individual dividend dates and amounts with the bivio report to start to work through where your problems lie. You'll need to fix them before you finish this step. If you have made investments in stocks such as REITs, or any of your stock has had some issues in the past year, you'll probably have some further work to do. What you need to be concerned about is information like the entries for this company, where some of the distributions have been classified as something other than dividends. In this case, some of the dividends that were paid by Annalee were reclassified when they closed their books for the year. They are now shown as Section 199A dividends and non-dividend distributions. If you own REITs, you will see their dividends reclassified into as many as 5 different categories. When you see this, then you have further work to do in step 2. To update bivio, you need to find the stock in question on the bivio 1099 DIV review report. First of all, you need to make sure that you entered a no in the 100% qualified dividend column in the first step. You want to adjust that if you don't. After you finish with that, you need to select the edit link next to the first dividend that needs to be adjusted. These are the 2 parts that this dividend was divided into. That edit link opens the dividend entry form where you can split the entry into each of the components shown on the 1099. After you do that, the total of the 2 should still be the same as the original total dividend amount for that date. Making this adjustment to reclassify your dividends is very, very important. The non-dividend portion is not taxable to you during the current year, but it adjusts the cost basis of your shares. The Section 199A dividend amount also may provide you with tax benefits. If you don't make the entries, you will overpay on your taxes during the current year, and your cost basis will not be correct when you sell your shares. When you return to the 1099 DIV review page, you will now see 2 entries in bivio for that distribution, just like your 1099 shows. You need to continue to make adjustments until all the reclassifications have been made in bivio. A dividend may be reclassified into between 2 and as many as 5 different categories. You make all the adjustments in the same way that I just showed. You won't know these breakdowns until you get your 1099s. In fact, your 1099s may be delayed, or you may receive revised ones late in the tax season. Since you can't prepare your taxes correctly without reclassifying your dividends, it may delay your filing. This delay and the extra work of splitting up each of your distribution entries into several parts is one of the reasons we advise clubs to avoid investing in REITs. We find many clubs that own them have a lot of difficulties completing this step. If your club doesn't own any REITs or ETFs, you probably won't have to worry about making these changes, because you'll find that each dividend you received is just being reported on your 1099 as a qualified dividend. Another thing you might find on 1099 DIVs that will require an adjustment is this. Sometimes a dividend is received and entered in bivio with a date early in the new year, but it shows up on your 1099 as reported during the past year. For example, in this case, all the dividends have a 2017 date on them except for this one. Even though it was received in 2018, it's being reported on taxes as 2017 income. You're pretty much guaranteed to see this if you own REITs and many ETFs. When this happens, you won't see the dividend listed at all at first on the bivio 1099 DIV review form, and your dividend totals for the affected stock probably won't agree with what your broker shows. To correct this, you'll need to adjust the date on the January dividend entry in bivio by doing this. You'll have to actually leave the tax prep program and go to Accounting Investments. Then you'll click on the name of the stock that pays the dividend. You select Edit next to the entry affected and change the date on it to 12/31 of the reportable tax year. You can then return to step 2 of the tax prep process and continue. You will now see the dividend listed on the 1099 DIV review form, and the totals for the company in question should agree with the 1099. The final part of step 2 is where you will address any foreign tax reporting issues. On the bivio review form, the country shown in this column, labeled country code, should be the country where the company that has issued the stock is incorporated. You should have a country other than US identified for any stocks where you see foreign tax withheld on your 1099. But you may also have other stocks or ETFs that pay foreign income that don't have foreign tax withheld. You may find a page similar to this in your 1099 that lists income from foreign companies. For example, this club received income from BP, which is a company incorporated in the United Kingdom. You'll need to know the country of incorporation for all of your investments. It may or may not be something you can find on your 1099s. If you don't see the information there, you'll have to do some research. You can find a help topic on our help page called Identifying Countries. It explains how to use the SEC Search Edgar site to find a country of incorporation for your investments. If you have ETFs or mutual funds that pay some percentage of foreign income, you should make sure that RIC is entered as the country code. RIC stands for Regulated Investment Company. If you need to change the country code, here's an example of how you do it. You can see here that US was listed for BP. From the 1099, you know that BP is a United Kingdom company, so what is shown here should reflect that. To fix it, you just click on the 2-letter country code. That's a link that will open this form. At the top is where you select the country that your broker has indicated. As I said, in this case, it's United Kingdom. After you select the country, you will see a new box where you'll need to enter the percentage of the dividend that's foreign income. For a stock for a single company like BP, this will be 100%. After you accept the selection, you'll be taken back to the form and you'll see that the symbol for the United Kingdom has been filled in. It's UK. If you own ETFs or mutual funds that have foreign income, you will need to select RIC as the country code during this step. In this case, it may very well be that not 100% of the income comes from foreign sources, so you'll need to change the percentage. You may find what you need to enter on your 1099 form, or you will need to go to the investor relations pages for the company to find out this information. If you follow our guidelines for keeping your club accounting simple, there's a good chance at this point that you will have found that all of your investments only pay qualified dividends, all of the dividend totals agree with what your broker shows, all the dividend categories agree with what your broker shows, and all of the reporting for any foreign companies agrees with what the broker shows. If that is the case, you'll be done with step 2. However, if you find certain things on your 1099, you have very complicated issues to address. For example, if you own commodity ETFs such as SLV or GLD or Bitcoin trusts, these are actually investments in a commodity such as gold, silver, or Bitcoin, not in stock. Each month, some of the commodity, in this example silver, is sold to pay expenses. These sales mean many calculations you must make manually and many adjustments you must make to your bivio records. There are manual adjustments to your tax forms required also. Unless you want to spend lots of time and are very comfortable doing calculations and making accounting entries, you will not want to do what needs to be done if your club invests in these. Finally, if you see information like this on your 1099, you have a big problem. You have received income which is classified as partnership distributions. This requires major adjustments to your club accounting and tax reporting. Unfortunately, handling these things is beyond the scope of the services provided to you by bivio. You will not be able to use the bivio tax forms as produced. You will need to get outside accounting help to help get your club taxes done for the year. So that's what you need to do for step 2 of the tax prep process. This is a very important step for you to complete, so make sure that you don't ignore it. Many of the cost basis problems clubs have are because they've neglected to do dividend reclassifications that were shown on their 1099s. If you find this step hard to do, just remember that you pretty much control whether or not you have to do it. Those clubs that follow our guidelines for keeping their club accounting simple by staying away from investments in commodity ETFs, REITs, or partnerships can breeze through this step quickly because they probably won't have any reclassifications or other issues to deal with. Just so you know, you can do this step now if you have your 1099 forms. The 1099 INT DIV review report that you use to do it is available to you on the accounting reports page. When you finish the second step and have finished comparing and correcting your dividend entries, you'll return to the tax prep screen. You'll see that step 3 is now showing. It also involves comparing a bivio report with a 1099 form. In this case, your 1099-B, which reports your capital gains and losses. Just like dividends, we have a review form that looks similar to what you'll be getting from your broker that will allow you to do this. You get to this step from this link. When you click on the link, it opens a page that looks like this. It's designed to resemble what your broker will be providing you on your 1099-B, which will look something like this. So what is all this stuff? Well, here's what you need to know. If you sell stocks during the year, you'll have capital gain income to report. On your 1099, your capital gains may be reported in one of 6 different categories. In the first section, you'll have information on short-term capital gains. These are gains or losses on sales of stock that you held for 1 year or less. If we look more closely, we see that this section is further divided up into 3 categories. For section A, or what are called covered transactions, your broker will be reporting your cost basis to the IRS. That gives them the information they need to do a direct matchup to what you report on your taxes. For section B, or non-covered transactions, your broker does not have to provide cost basis information. They will just be reporting the total proceeds from those sales. Your broker may show section B cost basis information on your 1099, but it will not be sent to the IRS. Section C transactions are not reported as part of a 1099-B. Basically, any other transactions that don't fit into the first 2 categories. They may just be shown on your 1099 as supplemental information. Now, don't get the impression that if something is not being reported to the IRS by your broker that you don't have to report it. You still have the obligation to report correct capital gains and losses for all your sales on your taxes. It's just that for sales included in category A, the IRS has a very easy way to compare what you filed with what you should have filed. There are similar categories in the long-term capital gains section. They are labeled D, E, and F. In section D, cost basis is reported to the IRS. Section E are the non-covered sales where proceeds are reported but not cost basis. And section F are transactions not reported for various other reasons in either of the other 2 categories. You'll see these same 6 categories on the opening page of the 1099-B review report. The first thing you want to do is look at the subtotals for each column in a particular category. They should agree with the subtotals shown on your 1099 for the same category. If they don't, each row label on the 1099-B review report is a link that will take you to the detail of what is included in the category. For example, if I click on the first link here, I get to the details of the short-term capital gains Section A category where basis is reported to the IRS. You can compare this to a similar looking detail page for the same category that you will find in your 1099. Start to hone in on where the difference is coming from by comparing the subtotals for each company between the bivio and broker's report. If the subtotals are the same for a company, it is not the problem. If they do not agree, you'll need to compare further details either between these two reports or between bivio and a realized gain loss report from your broker to find out what the problem is so that you can get it corrected. Now note that if you have done the audit in step 1, you should not find any issues at this point because you would have already found them during the audit and gotten them corrected. If you do find discrepancies, you need to determine why they are there. If you need to make corrections in bivio, you can jump back to the transactions that have been entered for the stock if you select this Review Entries link. That takes you to the investment transaction page or pages for the stock in question. You will need to correct whatever bivio entry or entries were wrong to fix your problem. There can be many reasons for differences. If you do find them and you know the broker's information is correct, you'll need to make corrections to your bivio transaction entries so bivio will calculate whatever the broker shows. In other words, you need to fix your accounting. You're not going to just change a number on a tax form. Here are some things that can cause issues. First, you may have transactions missing. If so, you'll need to find out what they are from statements and reports from your broker, and they will need to be added to bivio. You may find that your broker cost basis numbers do not agree with your bivio records. If so, you'll need to investigate and determine why, and then fix the entries in bivio that are causing the problem. Cost basis differences can be caused by things like this. You could have made an incorrect entry of a stock purchase. If you switched to bivio after your club had started, there might have been mistakes in your switchover data. The stock affected may have gone through a reorganization that wasn't accounted for properly in bivio, either during the current year or in past years. If you had multiple lots of a stock and you only sold some of them, you would have needed to tell your broker which lots to sell. If you've told them something other than FIFO, which is first in, first out, and you didn't edit the sale in bivio so the correct lots are reported, that would cause a difference. You may have had a wash sale. If it was this year, you'll need to add it into your bivio records. Bivio is the only investment club accounting software that gives you a tool to use to do this. If you transferred stocks to pay a withdrawal, you may not have selected the correct shares as transferred when you made the withdrawal entry in bivio. Problems you find may be due to incorrect entries made during the current year, or they may be from past years. If that is the case, you'll need to fix the oldest problems first and then re-enter any subsequent transactions that would have affected the cost basis of your shares. Working from oldest to newest will allow the fixes to propagate through your data correctly. This can be a lengthy project if your records have been incorrect for many years. In very, very rare cases, your broker may actually have an error on a reported cost basis number on their 1099. If you can prove that they do and that the gain loss shown by bivio is correct, contact us in support and we can help you make the entries that you'll need to report this on your taxes. And that's what you need to do for step 3 of the tax prep process. When you get done, you should have verified that bivio will report the correct capital gains and losses on your taxes and that they will be in agreement with what your broker will be reporting. Note that you can also do this step right now if you have your 1099 forms. It's done using the 1099B review report that you can find on the accounting reports page. So that's the bulk of the lengthy work. Once you've got all those done and not before, and the tax program has been released, you'll be able to go into the final steps of preparing your tax forms. These go much quicker. First, you'll take a tax interview to provide the final pieces of information that you need to enter. This link for step 4 that will show when the tax program is released will take you to the interview. Your tax forms are generated using your club data after you answer a few questions. You can retake this interview as many times as you'd like. In fact, if you change anything after you run it the first time, it's important to retake it to update the tax forms before you give them to anyone. On the first part, you'll confirm some basic club information, your club address, EIN number, and the date your club started. These will probably already be available and filled in from your club records. If not, fill them in here because they are necessary for you to continue. Next, you'll select the IRS center that your return will go to and the type of partnership that you have. You'll also need to know whether or not you've invested in a partnership during the year. If you have, you'll not be able to finalize corrected tax forms in bivio. You'll need to work with an outside accountant to get them done. Make sure that you check the filing instructions on our help page so you know where your return should be mailed. There's a link to the filing instructions on this page. Next is the method that is used to allocate or divide up your club income and expenses between the members. The default is time-based allocation, so this is checked because most clubs will use that. It represents the default IRS required methodology. It means that income and expenses are allocated to your members based on their ownership percentage on the date that they occur. If you are missing any addresses or social security numbers in bivio, you will need to click Edit and enter them on the next page to be able to produce your taxes. Next, you are asked questions about the type of partners that are in your club, whether they are all U.S. citizens or resident aliens, and whether all your members are individuals. If you have any members in your club whose member accounts are listed in the name of a trust, it's important to enter no to the second question. If you answer yes to both questions, you may be eligible to opt out of the CPAR audit requirements. CPAR stands for Centralized Partnership Audit Regime. Here are the requirements that you need to opt out. As we've mentioned, you can't have any trust as members of your club. You also need to file your tax return and distribute tax documents to your members by March 15th or file a valid extension before then. Your club can only have 100 or less K-1 forms to distribute for the year. We recommend that you opt out if you can. If you are eligible to opt out, you will come to this page. As I said, we suggest that you click here to select that you do want to opt out. If the IRS were ever to audit your club, it would be harder for them to do that. Who wants to simplify things for the IRS if they don't have to? If, however, you answered no to either of the questions on the partner type page, because some of your members held their club ownership in a trust, you will be taken to this page. Audit, you need to identify the members of your club that are trusts. You do that using the little drop-down menu in the entity type column. For most clubs, on the little menu that opens, you'll select Trust Individual SSN. When you have members who are trusts, you will not be able to opt out of the IRS CPAR audit procedures. On the next page, you will need to designate a partnership representative. This person needs to be someone who is familiar with the financial activities of the club. They will have the sole authority to negotiate with the IRS and bind the club and its members to any agreement reached in the event of an audit of your 2021 tax returns. You will need to enter name, address, phone, and social security number for whomever you designate as partnership representative. If your partnership representative holds their club ownership in a trust, you will need to enter their name only in this bottom section. You cannot have a trust named as a partnership representative. Note that if your club allows trusts as members and therefore cannot opt out of CPAR, You will also have a more difficult task if you ever have to amend a tax return. In the next step, you need to indicate if any of your club members are related. If they are, you'll have further questions to define who's related to who. The relationships you have to identify are listed at the top of the page. You do this because if related parties own together more than 50% of your club assets, it's called constructive ownership. And there's an additional form, Form B1, that will be generated with your taxes. That's about the end of what will happen with your answers to this question. Investment clubs that can use bivio for their accounting typically are not involved in any transactions where the answers to this question will matter, but you still have to file the Form B1. After you identify the first set of relationships, you'll be presented the remaining members to identify any remaining family relationships. You will keep being presented with these until you have no more to enter. This is the last of the questions that you need to answer for the federal return. If your club is in a state for which we provide state taxes, you may have a few extra questions to answer before you are through. After you answer the final questions, you'll be returned to the tax page. You can click here to generate your entire federal tax return. A single PDF file containing all the documents you need to file gets produced. You'll need to be patient because this may take a little time, especially if you have a large club. The new foreign reporting requirements are adding 7 to 8 new pages for the new K3s for each member to your return, as well as 7 to 8 pages of a new K2 for your club. When it's done, you'll be asked if you'd like to download it to your computer. So that's what you need to do for step 4 of the tax prep process. Due to the significant changes in foreign tax reporting in the tax program this year, this part of the program is being released later than usual. We hope to have it ready by the end of February, but that will depend on whether the IRS releases any further late changes. Fortunately, this particular portion goes pretty quickly. Most of the work you need to do is done in steps 1, 2, and 3, and as we discussed, you can work on those right now. If you return to the taxes page, you'll see a link to your entire federal document and also a link to generate or download any state taxes that are included in bivio that your club needs to file. You can return to the taxes page at any point to repeat any of the steps. As I mentioned before, if you change any club data, make sure that you do redo your taxes before filing. However, once you've filed them and distributed forms to your members, you shouldn't make any more changes to the forms or to your club records for 2021 or prior years. You should make sure you keep a paper or PDF copy of the exact version of the return that you file in your records or in your bivio file storage area. If you do end up having to later correct something in bivio, you'll need to compare your revised tax return to what you filed. And now I'm going to turn this over to Becky, who's going to show you what's going to be on the forms that are going to be generated.
Thank you, Lori. Once your tax forms have been generated, you're ready for the final step, which is to review, file, and distribute the tax forms. First, you should review what was entered on them. Your complete tax package will start with a cover page. You don't have to send this in. It just contains instructions for filing your return and the date it's due. If there are any issues noted, make sure to address them before filing your taxes. Here's the first page of your 1065. It looks kind of empty, but that's okay. Just make sure the information listed at the top looks correct. The main thing of concern on this page is that you don't forget to sign here. Do this before sending in your taxes, or those nice penalties we discussed at the beginning will apply to you. You should leave the Paid Preparers Use Only section blank. Schedule B comes next on pages 2 and 3. It's where other information is filled in. Bivio has filled this in based on information you entered during the tax interview and with information that would apply to most investment clubs. You should review each question and the way it's been answered to make sure all the answers marked are correct for your club. At the bottom of page 3 is where the partnership audit information is addressed. If you have elected to opt out of the IRS CPAR audit procedures, question 29 will be marked yes. You also have a Form B2 that will be part of your tax package and you'll need to file. There will be no information in the partnership representative section. If you're not eligible to opt out, as is the case for this club, question 29 will be marked no, and the information about your partnership representative will be filled in here. Page 4 is Schedule K. It's where your total club income and expense information will be filled in. This is the information that's divided up among the members and reported to them on their K1s. Most clubs will have only a few entries. Just a note that all the entries you will see on our tax forms are rounded to the nearest dollar. Check to make sure these entries are what you expect. Note that if you see an entry on line 11, you need to check why it's there. You should only see an amount there if you have received some unusual type of club income, such as winnings from a portfolio contest. If you haven't, you may have recorded something incorrectly in your records, and you should investigate and fix it before finalizing your forms. On page 5, the majority of the information isn't filled in for the majority of clubs. You should only see entries in the top section. If your club has sold stocks during the year, you'll have entries on a Schedule D. This is one of the places where the information from the 1099-B review process ultimately ends up. The summary information in the covered categories for which you haven't made any adjustments goes directly on this Schedule D. You won't find it detailed out anywhere as part of your tax forms. However, if you have made adjustments, had wash sales, or have information for sales reported in categories other than the covered categories, you will have entries in this section, and you will also have pages of another form, Form 8949, filled in. It lists the details of your transactions, as well as any adjustments that were made between what the broker reported on the 1099 and what you are reporting as cost basis. There will also be some supplemental forms your club may have. For example, if your club has opted out of the CPAR partnership audit requirements, you'll have a form called a Schedule B2. It lists all of your club members, their tax IDs, and the type of entity that they are. For investment clubs that use Bivio, these should all be listed as I for individual. New for this year, you'll also have a 7 to 8 page Schedule K2 to file as part of your club's tax return. This covers information needed for foreign tax reporting, not only for your club, but also for each of your individual members' personal taxes. Due to recent IRS regulation changes, this is included for all clubs, whether or not your club had foreign income during the year. Some other supplemental forms which you may need to send in with your club filing are these. You may have schedules with lists of any items shown for special categories on your Schedule K, or a list of any distributions, withdrawals that your club paid. If, when you identified your related parties, any of your related members owned, in total, more than 50% of your club, there will also be a Schedule B1 for you to send in with your taxes. As part of your tax package, you'll have a form called a K1 for each member. It will report their portion of your club income and expenses. You send a copy of each one in with a club return, and also give each member the copy that contains their information. They need to report it on their personal tax returns. On each member's K1, you should see the name, address, and Social Security number for that person filled in this section. And don't forget to check this. If you file forms with any of this information missing or incorrect, your filing will be considered incomplete and possibly late, resulting in the hefty late filing penalties we discussed earlier. The amounts shown on each line of this report will be the members' portion of your total club income and expenses that were shown on Schedule K. The codes for lines 11 and 20 can be looked up online if you need to know what they stand for. You'll find a link to the page of codes on the K1 attachment page and on our help page. In addition to the K1, new this year for all clubs will be a K3 form for each member. It will probably have 7 or 8 pages. Club members may need this information on this form if they have foreign income that they claim on their personal tax returns, even if there is no foreign income from your club reported on them. Again, make sure that each member's information is complete and correct on the pages of this form. Copies of all of these pages are given to each member and also sent in with your full club tax filing. There may also be a K1 attachment page for each partner. If your club has opted out of the CPAR audit procedures, it will contain the note they need to get, informing them of that. If they had any federally non-deductible portfolio expenses on line 13 of the Schedule K1, the code associated and description for what was reported will also be listed here. Some states may still allow a deduction for these on state returns. In addition to a K1 form, a member who has withdrawn cash or stock during the year may have additional tax liabilities and will have additional information that does not appear in their K1 to report on their personal 1040 Schedule D form if they had a gain or loss from their withdrawal. This information is shown on their withdrawal report. If they receive shares of stock, this withdrawal report will show their cost basis in those shares. It's important that they receive a copy of this report along with a K1 at the end of the year. Be sure to reprint all withdrawal reports at the end of the year. You do not have to send in the withdrawal forms with your club tax filing. Just keep them for your records and make sure to distribute them to the individuals affected. And that completes the form review. If you're sure everything is correct, it's time to file your return and give your members their forms. You can check this box to allow club members with online access to log into bivio and print out their own copy. They will only see their own forms when they log in with their own ID. Only the club treasurer, administrator, and president can see everyone's information. If members have made any withdrawals that have tax consequences, they'll also find a link to their withdrawal report. The complete tax package link includes everything you need to send in to file your club taxes. This includes Form 1065, K2, K1s, K3s, and all supplemental documents. Don't forget to sign the form on page 1 and make sure all Social Security numbers and addresses are entered and correct on K1s, K3s, and if applicable, on Schedule B2. Mail them to the IRS using both certified mail, so you have proof of your mailing date, and return receipt, so you have proof it was delivered. This is extremely important. The post office and the IRS are both overwhelmed and making many mistakes these days. There have been more than the usual number of clubs that have received large penalty notices for late or missing filings. Having these receipts is what is needed to prove to the IRS that you did file on time so that you can get those abated. Distribute to each member their K1 and their K3 with all attachment pages. Also give them a copy of any withdrawal reports pertaining to them that you have reprinted at the end of the year. Records you should keep include a paper or PDF copy of all the forms in your complete tax package as you've sent them in, copies of all withdrawal reports reprinted at the end of the year, a full transaction ledger from January through December, a year-end valuation statement and member status report, your brokerage statements and 1099s, an unrealized gain-loss report from your broker that shows the cost basis details for each lot of each stock you owned as of the end of the tax year, a realized gain-loss report from your broker that shows the cost basis details for each lot of each stock that you sold during the tax year. You should keep these things as long as your club is in existence. Your current club records are still being affected by many things in the past. If you ever have questions about something, it may be important to look up some old information. You can easily store digital copies in your bivio files area. Note that you can't count on your broker to save these things. They will only have historical information available to you for a limited number of past years. Some states require you to file state partnership returns as well as your federal ones. We provide state programs for Colorado, Pennsylvania, New Jersey, New York, and California. For other states, we offer you a cost-effective option for having your state tax forms prepared. If you go to our Club Cafe page, you'll find 2 links on the right side that discuss state tax filing. The first will take you to this page, which gives you a table showing state tax filing requirements. The second link on the Club Cafe page will take you to this page, which describes an option we offer if you need state taxes prepared and your state is not included in bivio. In summary, remember to keep your club accounting simple and your tax time peaceful. You can have a great club and comply with IRS regulations without any elaborate accounting knowledge. All you need to do each year is stick with basic investments, publicly traded U.S. corporate stocks. Check your records at least once a month to make sure they're staying correct and up to date. If you do so, preparing your taxes can be done in 3 simple steps. Verify your records, take a tax interview, print, review, distribute, and file tax forms. As always, if you have a question as you go through this process, email it to us at support@bivio.com. If your question is about reconciling your bivio records with your 1099, please email us a copy of your 1099 along with your specific questions. Do not try and type details into the email, but do identify the stocks you have a question about. We can work on things most quickly if we can look at what you're looking at. Thank you, everyone, for coming. We're looking forward to helping you work through a simple and stress-free tax season.